if you have some cash on hand and you want to know exactly where to put it to work, where to invest it in the stock market in 2022, well, this video is for you because I'm going to share with you where I think the market is going to go in 2022 based on what we've seen in 2021 and what the risk for 2022 are looking like today. And based on that, my picks in terms of sectors and also in terms of few of the stocks that I already have, but I may also be inclined to add some more when it comes to getting those gains for 2022 because it's going to be a more delicate year when it comes to making money in the stock market. That's what I believe. So let's get into it right away. All right. First of all, the main risk for the stock market in 2022 or going in 2022 was inflation. Inflation. That was the only way. I mean, 2020 was COVID. 2021 was, are we still going to have growth? And we have, a major amount of growth, but that growth was still a little bit, tamed by silence, by COVID still being around with Delta variant and now Omicron. But, some scientists are calling on this to be the fade away and the end of COVID. That's why they're shifting all the risk now into inflation because it has some major implications when it comes to some of the pockets of the market. I mean, first of all, look at how the market is behaving today. I mean, for a Ford Motor Company gaining 12%, this is one of the top performers, the top gainers today on the market. But if you look at the overall main indexes, all right, the Dow Jones, the S&P, and the Nasdaq, you can actually get a better idea of what we might see at least the very first half of this, at the beginning of this year. So look, the Dow Jones, interestingly enough, at some point was, around 300 points up today, which was very surprising because at the same time, you had the S&P 500 being very flat, but you also have the Nasdaq diving, all right? The VIX is up 4%, which is the fear index. So is this some sort of rotation? No, I believe the answer is coming from this article, around inflation, all right? Because inflation, it's when you have prices soaring, everything starts getting expensive. Houses are expensive, rent is higher, gas prices are higher, groceries, clothing, everything is expensive. Because in 2020, when we were locked down, nobody was buying anything because we were all at home. But also factories were down, factories were off. Nobody was working, all right? For a period of time, you had everything shutting down and the economy close to zero. Now, when everything started picking back up, everything started reopening, people were still sitting at home with money that they received from the government's stimulus money all around the globe, all right? And based on that, they started spending that money, plus some of us who had the ability to still work, had that dispensable amount of money that they were able to save. So we have a little bit of demand all of a sudden picking back up, creating supply chain issues. Supply chain issues is really when you order something and, it used to take 3 days or 2 days to come to you and receiving your merchandise, or your service. Now it took more than that because everybody all at the same time was functioning full time. And now we have some good news coming from those pressures maybe nearing peak. At least this is what Reuters is telling us today. The global supply pressures may be nearing peak, the New York Fed index shows. All right, the historically high pressures on global supply chain networks that have contributed to shortages of key goods and materials and a surge in inflation may have peaked, according to a new index released by the New York Federal Reserve on Tuesday. The Global Supply Chain Research Index, GSCPI, surged early in the pandemic when China imposed lockdown measures. Pressures eased as production resumed but picked back up during the winter of 2020 as COVID-19 infections jumped. But more recently, we are seeing, some signs that may suggest that global supply chain pressures, which was still historically high, have peaked and might start to moderate somewhat going forward. So here's the thing. With these global supply chains moderating and nearing the peak, it means that we have more ships, on the seas. We have more goods, more factories getting closer, I mean, getting faster and quicker to the end clients, not only for factories or for, manufacturers around the globe, but also for consumers, people like you and I who are, buying stuff online through Amazon or Etsy or everything else. All right. So it's a good news. It's a good news because this was really at the very bottom, at the very origin of inflation. When everything starts, to be expensive, it's really because of these global chain issues and the factories not being able to meet the demand coming from everybody at the very same time. So that's why the president of the Fed, Jerome Powell, said many times that he believes that Fed might be transitory. Now, Cathie Wood, which is also another, well respected person on Wall Street, said that, hey, this inflation thing, fears might be a little bit overrated. And I tend to agree with both of them, even though inflation, it's going to stick more than what some people think, but it's not going to be as bad because it was just a natural way for the economy roaring back after a year being completely, shutting off to happen. So based on this, I believe it's why today, for example, when you look at the major markets, you see that the Dow Jones, which is mainly the index for what we call the industrial companies, the cyclical stocks, the builders, the airlines, the oil and gas producers, all of these guys, infrastructure companies. These are the guys that are now seeing that, hey, it might be time to actually get some of those stocks because the tech stocks are now overpriced somehow. Not saying that they're going to, crash all of a sudden because technology is still going to be one of the key catalysts of growth moving forward. But I think there are some parts of the pockets of the markets here, for example, in the Dow Jones and also in the S&P 500, but also on the Russell 2000, the small caps, which have been really, really beaten down even in 2021. They haven't really performed to the full potential they were supposed to. And that's what I'm betting my money on 2022. So in order to do this, I'm calling on the cyclicals, all right? All of these companies, all of these sectors that are what we consume on a cyclical basis. If you travel or you used to travel, you travel for work, you travel for pleasure, you will do that maybe, holidays, summer. You will do that on Thanksgiving. You will do that on Christmas. You will do that on, Easter. Those are what we call the cyclicals. Those companies that are producing or building roads with infrastructure bill, for example, these are, the cyclicals. So airlines, definitely one of the majors that have been hit the most. So as we see more people traveling, as the infections rates go down, and this is another thing, Omicron is starting to also flatten pretty sharply in South Africa. So it's just a matter of time before it also hits in the rest of the parts of the world and the US, for example. So jets, it's another ETF, another sector where you have that decent money. Look at the 5 years period, for example. We are not even close to where we were before the pandemic started. All right. So this is one. And then you have oil and gas, XLE, the energy sector. Energy sector, almost 4% today. So if you I look at the 5 year, we are we are still kind of 2 points away from pre-pandemic levels. But with the price of gas now on the markets, not at the pump, but on the markets, I believe we can go really, really way higher here. So look for stocks that are also in the oil and gas industry, especially small and mid caps. That's where you really have, the potential to get, 40, 60, even doubling your money in 2022. And then we also have the financials. Financials, just because the financial sector gained today almost 3% at the time of recording this video, because interest rates are going to increase. The Fed already said that they're going to increase interest rates. How many times this year? Between 2 to 4, according to the people you poll or you ask the question. But if you look at the 5 years, you can see that going back to comparing to the where the pandemic started, it's already way higher. It's already way higher, 30% higher. So that's why I'm not betting a lot onto financials, but it's also another sector that's going to be poised, in 2022 based on the Fed at the central bank increasing rates, because anytime the central bank increases rates, it means more money in the pockets of the banks, because they're going to charge you and I, our customers, when you actually get asked for a loan, these kind of stuff, which are the main money, cash printing money for the banks. But again, if I were to only choose two or one sector, it will really be oil and gas and the cyclicals, and the jets, oil and gas and airlines. These are really the two main where I'll have my money. And then finally, I also have cryptocurrencies. Cryptocurrencies right now are kind of into a winter. Bitcoin really barely standing at 46K, Ethereum, way below the 4,000, Dogecoin and the meme coins also really, really down. But I believe 2022 might be the year where we see another very sharp increase, where we might see Ethereum hitting 10K. We might see Bitcoin hitting 100K. It's not impossible. And we also might see maybe Dogecoin, Shiba Inu, all of these, SafeMoon, maybe hitting finally the price target everybody is waiting for, like $1 or even a cent. $1 mainly for Dogecoin, for example. So these are really the best picks according to my personal opinion and analysis, based on the stories that I shared with you earlier, where I'm putting my money into the market in 2022. But keep in mind that it doesn't have to happen necessarily the way because I just said so, because hey, it's anything with the market is that you're never sure. You are never 100% sure, but you might never know. All right. So